What sectors do you think might particularly be benefited by this tax overhaul?
So I think you still have to stay close to industrials that have a high degree of CapEx exposure. We really like the financials. The financials, just to put a number on this, have paid 25% of all of the tax in the S&P 1500 over the last year. Wow. So they benefit largely, as you would know. And consumer discretionary, right? If consumers have more money in their pockets, they're going to get a tailwind. They're likely to spend it. The multiplier effect may not be quite as strong late in the cycle or later in the cycle, but they will still spend.
One interesting forecast that you call for is long-short equity and credit strategies to do well next year. Yeah. Long-short equity strategies have been crushed, shall I say. Credit hasn't done either that well. Why now? Why is it going to be better?
Well, I would say credit has done well, right, as spreads have continued to tighten. But we think you move into an environment in 2018 where you get much more volatility in the credit markets than we've experienced. We know that spreads are at cycle tights, right? There's been no volatility. It's been benign. It's been anemic. It's been whatever you want to call it. So we want managers that have an opportunity to get on either side of that, right? So if spreads do start to blow out, they can be short that as well as just long.
Yeah, real quick, are you advising clients, retail clients, to find a way into some of these hedge fund strategies?
Yes, and here's why. So we think the hedge fund community does better in 2018. They had a good year in 17. What you have to think about in that space is risk adjusting it, right? So if I'm getting absolute returns, for example, let me just pick on long short equity of 12, 13, 14, 15%, but at a beta of 0.3 or 0.4, that's a great risk adjusted return. 2017 has been a phenomenal risk adjusted return year.